Next, we have a conversation with someone who isn't afraid to express his views on the good and the bad in African fintech. Firas Ahmad is Group CEO of AzamPay, an East African payments management solution. Firas is a frequent writer and speaker on technology issues, and today's conversation will focus on how Africa's mobile money space needs greater innovation in order to realize its full potential.
Welcome back, everyone. And here we go with a short fireside chat with Firas Ahmad, who's CEO of AzamPay. And Firas, why don't you just tell us quickly kind of just a little bit about you, your journey to becoming a fintech founder in Africa, and then a little bit about your company. And then we'll get into some issues.
Sure. Thanks. First, Charles, thanks so much to you for inviting me on here. Very happy and honored to be here. My journey was an interesting one. Basically, AzamPay is kind of a sister company to the Azam Group, which is a well-known manufacturing conglomerate based in Tanzania, but operating in many parts of East Africa and South Africa. And the idea was it has a very strong consumer brand. And we thought, well, how can we leverage that consumer brand in the technology space? And so what I discussed with some of the owners of the group, and we ultimately decided on moving on a kind of a payments and commerce ecosystem around which we could leverage that brand in the consumer marketplace and build a series of products that not only supported the Azam Group in terms of how they reach their consumers and do their business, but also open that platform up to other manufacturers, distributors, and small businesses. So we could help build an ecosystem around digital commerce and digital payments that integrated some features we felt were being ignored generally in the digital space or digital economy in that part of the world.
Okay, so, I'm sorry, I just dropped something. Could you talk about what those things that were being ignored is, just very quickly?
Yeah, sure. So let me give you a couple of use cases. One interesting use case we found was, let's say you wanted to order 50 bags of flour from, say, the Azam Group. So what the system that was in place was you would call the salesperson, get a quote in terms of the price. That quote would then be, they would request that you deposit that amount of money in a particular bank account. Okay. Then from that bank account, you could take a picture of the receipt from the bank account and send it back to the salesperson, who would then put that receipt on a Skype thread to the finance department. Then the finance department would look up on a computer the online banking tool and see whether or not the receipt matched. And then it would then go on another Skype thread to the shipping department. And we saw a lot of inefficiencies. Not that some companies weren't dealing with that, but some of the tools around building some efficiencies around managing payments, managing commerce were not there. We saw some segmentation in the mobile money space in particular, where there was a lot of incentives for P2P payments, person-to-person transfers, but not a lot of segmentation or incentives for businesses to start transacting digitally. So if you look at some of the fee structures, if you look at some of the restrictions around mobile money payments, we felt that they weren't really being tailored to this B2B market. So being part of a large group that dealt with a lot of distributors and wholesalers, we felt we were in a good position to build products and like I said, this ecosystem around managing payments for businesses and helping facilitate their business operations better using digital technologies.
Okay. So one of the reasons we thought it'd be fun to talk to you was you've written some stuff recently. You have a Substack newsletter, I guess.
Right.
Substack's awesome, by the way. I keep meaning to launch something there.
For sure.
And you kind of had this point of view around mobile money,
right?
And kind of, you acknowledge sort of what the gaps it's filled, but you sort of point out some reasons why it has some fairly significant limitations. And I'd like you to talk about that a little bit and kind of why mobile money, what's good, what's bad about it, and maybe what the future looks like around mobile money, or what it should look like.
Sure. Yeah, sure. So yeah, I do. First of all, mobile money, I think it's a fantastic innovation. I think it's one of the greatest financial innovations of the last 20 years anywhere in the world. If you look at the way mobile money has created a wholly independent set of rails that are specifically and uniquely addressing the needs of consumers in emerging market economies. So we'll set that aside. But what I do think is there are some shortcomings that also need to be addressed as we develop the mobile money infrastructure and build on top of what's already there. And so a couple of the issues I raised was around going beyond what we actually addressed a little bit earlier around P2P payments or transferring money from one place to another. What the mobile money networks are actually very good at is taking money from one place and moving it to another place, managing for risk, managing for theft, managing for security. It gives a little bit of peace of mind to the consumer that they can move money quickly and efficiently at a particular cost. And in some cases, that's a fantastic cost. So I give you an example. Let's say if I wanted to, before mobile money, if I wanted to send money to my mother in a village, it would take me a weekend and a bus ticket to get there, drop the physical cash off, and then come back. Okay. With mobile money, it takes literally a few seconds and maybe 1 to 2%, up to 3% of that transaction value, depending on the amount of value. So for that, let's say you're sending 100,000 shillings, say in Tanzanian shillings, and it costs you 3,000 to make that transaction, much cheaper than a weekend bus ticket to visit your mother. Okay, so that's a great value. But at the same time, when we start looking at the vast majority of commerce in sub-Saharan Africa, and we look at point of sale transactions, particularly where 90 to 90% of commerce happens around these point of sale transactions. So you go to a shop, you buy your daily consumables, you go to a bus station, you buy a ticket, et cetera, et cetera. Still 90 to 95% of these transactions are taking place in cash, okay? Despite the fact that mobile money has been around for 10 to 12 years, right? So there's high adoption amongst transactions that are taking place where you are not present at the time of that purchase where the product is being purchased. So for example, airtime, for example, satellite TV services, for example, bill payments for, say, electricity. It's much more convenient to pay with mobile money than it is to go to the office and pay in cash. So really what mobile money has solved is a convenience factor, a tremendous convenience factor that has unlocked a lot of value for these emerging economies. But what I'm arguing in that Substack article and what I've been arguing for the last few years is what's the next step for mobile money? Now, if you look at, say, credit cards, which essentially mobile money has obviated the need for in economies like sub-Saharan Africa, particularly in East Africa, people don't use credit cards. They generally use mobile money. But at the same time, credit cards have their values. So, for example, one of the examples I brought up in that article was around rental equipment. Let's say I wanted to rent a car. Okay, with a credit card, I swipe the card. The bank is already validating my credit worthiness by giving me that card. They're telling me that this is a reliable customer. You can rent him a car, which might be worth $10,000 or $12,000, but you're only purchasing $200 of value from that car, say for 2 days of rental. Okay. By using mobile money, I don't have any method of ensuring that that value is still in the mobile money account when I return the car. Whereas with a credit card, they can simply charge the credit card company, and then the credit card company and the bank issuing bank are then responsible for going and getting that payment from the customer later on. So it creates this risk mitigation mechanism, which is very critical for allowing transactions and commerce to take place for different types of use cases that mobile money is still not in a place where it needs to be. And so I think part of the issue is getting mobile money to think beyond P2P and to start looking at these other use cases, and maybe even borrowing from the credit card use case or other use cases and other transactions, and building that out.
Is part of what you're saying that maybe I'm inferring, but that mobile money has in a way sort of slowed the adoption of credit cards or some similar mechanism in the economies?
Well, I wouldn't say that's a negative thing. So I would say, yes, they have probably slowed the adoption. And I think that's probably positive because if you look at the costs around managing credit cards, it's very high. Interchange fees, acquiring bank fees, network fees, et cetera, et cetera. That's the bad part of a credit card. Okay. Right. But at the same time, the good parts of the credit card those values could be incorporated into mobile money. And I think one of the reasons it's not happening, and this is my criticism of the industry in general, is mobile money is a fantastic business right now. If you look at most of the mobile money wallets in East Africa, even obviously in Kenya, you have Safaricom, in Tanzania, you have M-Pesa, you have Airtel, you have Tigo. They're making very good, it's a great business. They're making a lot of money doing P2P transfers. Mm-hmm. So what happens when you have large businesses that make a lot of money and are generating a lot of profits, they tend to not innovate. In fact, they're disincentivizing from innovating because ultimately it's just a quarterly. You want to make your quarterly sales goals. You want to get your bonuses. You want to get your stock prices up. So as a result, looking at other opportunities becomes less of a priority. And so my argument would be that it's in fact this overwhelming success of mobile money that in some ways now creating a bit of an impediment for it to then now start to innovate beyond some of the initial use cases that made it so successful. So I think it really needs, there's a time of innovation that needs to, a second round of innovation that needs to happen. Sorry, go ahead.
And you're saying that its success in a way is disincentivizing the innovation that's required? Is that sort of what you're saying? Or?
It is to a certain extent. I think it is. I think in part some of these many of the decisions made on mobile money. Let me give you a good example, and even it's somewhat of a structural constraint. So let me give you an example. We at AzamPay, we've built out a B2B commerce engine called Sarafu. It's essentially a distribution platform similar to what you might find, say, in China, very scaled down version of Alibaba, where small businesses can go and get their supplies online. We deliver them last mile logistics to the door of the customer. Okay. Now that's an innovation that's created a lot of value for many of these small shops. And it really fundamentally works because the payments are digital, right? We're only allowing digital payments to ensure kind of the control of pricing and control of fraud and things like that. Okay. Now, I can't imagine an MNO operating a digital wallet would go into delivery of products. They're not going to open up warehouses. They're not going to do deliveries of the last mile consumers. And that's not innovation I would expect them to do, right? But I guess the point I'm making is without having that experience and without understanding the nuances of that type of business, some of these MNOs are not adjusting themselves to that reality. Okay, so if you look at the fee structures, if you look at the way that they've segmented the market, in fact, there's very little incentive for anyone to digitally trade wholesale goods on mobile money platforms because the charges are simply too high. Right. Okay, so as a result, they're not interested in that business, right? They're never going to go into last mile delivery. Therefore, they don't really care about it as much as they would if they were in that business. And as a result, then you have innovation that tries to come in and work on those payment rails and then run into obstacles or issues with some of these payments players who are maybe resistant to those ideas because it doesn't kind of feed into the business that they're currently creating a lot of value from. Okay. So, the general question for me is, how does your network that your phone runs on have anything to do with the wallet that you carry? For me, these are two totally different things. If I have a Airtel cell phone, why do I then have to have an Airtel Money wallet? Why can't I be interacting with M-Pesa? Because that's giving me a better value, right? So there's some of these artificial barriers to commerce that prop up because of some of these things. And I think the industry is developing, and I give Tanzania a lot of credit for the tip system they're building, and they hope to launch this year where they interoperate everybody together on an even platform. So I think that's definitely something that will help. And you've seen that in India, right? Where you've had this interoperable platform develop to support these types of transactions.
Okay. So quickly, I want to get on to kind of a lightning round of topics before we finish, but quickly, sort of a couple of thoughts of what you think needs to, I sort of touched on it, I think, but just to summarize, a couple of things you think need to change in order to make mobile money sort of more what you envision it should be. Okay,
so a couple of things that could change. I mean, we are working on some of these changes ourselves in AzamPay, and we're actually planning on launching AzamPesa, which is a mobile wallet. We've just received the regulatory compliance from the regulator. So in doing so, what we hope to do is, like I said, look at some of these use cases for mobile money that aren't really addressed in the existing kind of segmentation of the market. So one definitely would be B2B wholesale payments. How do we make those viable as a business for other players who want to go into that space? Another area where I think is really trust. So if you look at the way business is done, there's so many of these small marketplace sellers. They open up Instagram accounts, they open up Facebook accounts, they open up WhatsApp accounts, and they sell products on those platforms. But there's no way of managing the payments. What ends up happening is they find customers and then they meet them in the street and then they exchange cash, right? Why? Because there is no trust. There's a trust breakdown in the system. So for me, really one of the big kind of advances for mobile money right now is to look at trust as a critical feature of the system. Instead of focusing on the payment transaction, as in moving the money from point A to point B, how do you build trust between unknown actor A and unknown actor B? And how do you build that trust so they can transact without physically being present together, right? When that starts to happen, and you create products and tools for businesses and small people, anybody running, maybe they're designing clothes, and they might be selling, say, in Dar es Salaam. They could never sell in Arusha because they're not going to take trips to Arusha to sell, right? But if you can create a system or platform where that person can then sell to a customer in Arusha, all of a sudden the market for that person's products has increased tenfold. And in fact, maybe the price or the value that they can create increases tenfold. Yeah. And so these... Yeah, absolutely. So these types of innovations, I think, need to happen. And this mindset has to shift from mobile money being a transaction tool to mobile money being a trust building tool. And that's, I think, where the value of credit cards has come in for consumer economies in the US and Europe, right? It really mitigates that need for trust. In fact, PayPal itself is the best example. People started doing e-commerce and they were afraid of putting their credit card online. PayPal said, don't worry, we'll take care of it. Just use your email and we'll take care of everything else. Right. And that's how it blew up. So this type of stuff is not happening yet in mobile money. I mean, it's happening to a certain extent, but I think it can be turbocharged. And also, I think what really requires is some of the operators involved in that commerce business, the digital commerce business, to start working more closely with the mobile money providers to make that happen.
Okay. That's really great insight. And I think maybe that conversation isn't happening enough. So I'm glad to have you on to talk about that. I just wanted to we have a couple minutes left. And I just wanted to, just for fun, kind of throw a word at you or a phrase and just get you to get a quick hot take on it. So I'm going to start with big banks, all this specific to the region, of course.
Big banks, I think, like I referred to before, trust. I think people at the consumer level don't trust, and they need to build better trust with their consumers. And one thing I would say in particular is nickel and dime fees. People hate nickel and dime fees. And one of the reasons they avoid some of the banks is because they're afraid of them. They don't know what's going to happen to their account. Okay.
All right. Crypto.
Yeah, crypto is interesting. I think as a hedge against inflation, it might make a lot of sense. But I haven't seen the application in Africa outside of cross-border transactions. I can see cross-border as making a lot of sense, particularly when you don't need to convert from currency to currency. Mm-hmm. But in the country, I want someone to explain to me what exactly the use cases that it can be used for. I mean, Bitcoin for sure, you cannot do Bitcoin transactions for point-of-sale transactions. It's not going to happen anytime soon. But I'm open to it, but I haven't seen a great application for non-cross-border or non-hedge applications.
Okay. VCs, and maybe a little context, just sort of what role are they playing, and what role should they be playing in the fintech environment in the region?
Yeah, so VCs is interesting. I think a lot of the VC, a big chunk of the VC capital in sub-Saharan Africa is from companies that are not based in Africa or coming from capital that's from the US or Europe. Right. I think that's great. I think people should be investing in Africa, and I think it's fantastic that there's interest. At the same time, sometimes I feel like there's a bit of a disconnect between the understanding of the market on the part of the VCs and the reality on the ground. So many times, we haven't taken any VC money. We are funded from the group itself, so we don't have that problem. But what I've seen a lot is VCs having particular agendas, and not that they're bad agendas, but they just have particular agendas because that's how they fund their funds, and they don't always match with the reality on the ground. So you have people building businesses to satisfy the VC requirement, but it doesn't really match the on the ground reality. So I think there should be some communication there. The second thing I would say about VCs is I really hope to see some exits for some African founders such that they can build their own VCs internally, because the best VC is the one that lives the product that you're trying to build. That's my experience.
Just quickly, I was having that conversation with another group we were talking with earlier, and the pay stack was a big one, right? But you need more of these to kind of model that sort of vision that there's that kind of outcome available. And then to your point.
Absolutely. And I think, no, absolutely. One thing to add there, I think there is a lot of old capital in Africa that's not going to understand how to invest in startups and tech. Okay. And I wouldn't expect them to. In fact, the reason they are successful as quote unquote older capital is because they didn't do crazy things like that. The ones that did crazy things never survived. Right. So I would say it's really incumbent upon the younger people who understand the tech world to be the ones that push this type of investment and then mentor the companies that come up. Be involved, be on the boards, advise the startup founders, mentor them. I think it's very, very important because that's how I think we'll see a lot of success in this space.
Okay. We're going to have to end it there. We're running a little long, actually, but that's okay because it was fun. Firas, thank you very much for joining us. And I'm sure the audience will want to interact with you.
Sure.
So, but, you can look up your company or I'm sure they can find you on LinkedIn if they're interested.
Yeah, find me on LinkedIn. That's for sure. Thank you so much, Charles. It was a great conversation. Glad to be on here.
All right. Thank you. Take care.
Thanks. Bye-bye.
Bye-bye.